So I personally started investing with my dad, who was not an investor. He was a doctor, family physician, but he was exactly the opposite of what I just mentioned. He was interested in making a lot of money quick. To him, investing was about finding a not expensive stock, which meant it had a low price, and buying a lot of shares and watching these shares quickly jump. Something like Nvidia would have made him very happy. Um, that's how I got into it. I was about 14, 15 years of age, and I had no idea what I was doing, but we were doing this together. And that's what really got me or had, made me fall in love with the investment world. But I eventually realized that this was not a winning strategy because we were not successful. And we were buying at the wrong time and we were panicking quickly because we had no understanding what we were buying. And that's, in my opinion, how the shift or when this shift started, uh, I decided that no, we should be investing in nice stuff that we understood and then, watching it slowly compound, which again, it is hard for human beings because we are hardwired to react to uh, events, attacks. So it's throughout evolution, we're hardwired to be, to react quickly to this tiger or bear or whatever is attacking us and to survive. It's an amazing model throughout evolution. That's a bad model for the investing world because it means every time there's something negative, we react and we have to do something or transact or change, which usually means we're transacting at the wrong time. So that's how it started for me. I ultimately went to university. I studied finance. I got accepted into McGill. That's how I ended up in Montreal. I was in the investment club. I applied investments. I was what we call a stock rat. So it was easy for me because I knew this is what I wanted to do. And eventually I started my career at the amazing CN pension. I had also met the president of CN at one of the McGill events. And CN had very much that same investment style back then. They were into, the Buffett concentrated, long-term, etc. And that's how my professional career eventually started, really. And that's how all these pieces were put together. What has changed, in my opinion, and I would say we've improved it, is the process by which we get to that result. I became a fund manager in 2003 initially, which is more than 20 years ago. And as much as I had this investment philosophy, didn't have all the pieces and the process and the know-how complete. And alongside Andrew, who's been my sidekick for a long time now, we started putting it all together. And that process has really improved all the time. And I think that's going to continue to improve just because I think this business is one where you're always learning and you're always improving. Now, the rate of change might slow down versus the first early years, but it is going to continue. And we're always looking to add things, improve. I'll give you an example. One of the more recent, a few years ago, addition was the the ranking process that we have that we call the time scoring of businesses. And time stands for TIME, track record, industry, management, quality, and economic mode. That's something that we kind of invented a few years ago because we felt the need to more mathematically evaluate the quality of a business. So things like that are going to constantly evolve. We also try to learn from our mistakes. We try to learn from mistakes that other people make. I remember we looked at a company in Europe and Germany called Wirecard, which we luckily passed on because we couldn't track the cash within the business. So the business was very successful, amazing track record. But when we followed the cash and the cash flows, they were very opaque and hard to find. Ultimately, this business we realized was a fraud actually. And so this is also a case study that we took, analyzed it and looked at things that we could have maybe picked up on that would have helped us avoid these problems. So expect the process strategy, maybe the way we deploy capital to change or improve if we can improve it. But the overarching investment philosophy, I would say you should expect that to stay. We're always going to be concentrated, long-term, focused on a very small subset of the market, and businesses that we know really well.